On this episode of Exactly How, we're going to show you how to bypass the bank and use private, non-bank lenders to fund your deals. We're going to show you how to avoid all the traps that the banks put out there when you try to get funding, and we're going to help you understand the entire process on how to get a deal 100% funded on this episode of Exactly How.
You're listening to the Exactly How podcast, where you'll hear the underground, closely guarded wealth-building secrets of successful people around the globe. Discover exactly how to improve your mental, physical, and financial health. Feel better, make more money, live, give, and prosper in today's exciting, fast-paced world filled with opportunity for those who know exactly how.
Hello, welcome everyone to the Connected Investors podcast and YouTube show, Exactly How. During this episode, you're going to discover exactly how to solve your funding problems when it comes to real estate. And we're talking about dealing with banks. For those of you who are new, my name is Ross Hamilton, today's host and CEO of ConnectedInvestors.com and PrivateLenders.com. Today we have the privilege to learn from a guy who has built a very successful real estate investing business and has also been very successful as a real estate agent. He had over 400 agents that worked for him. He's coached agents as well. So he understands both sides of the equation in a very unique way. Prior to his career as a real estate expert, he was a radio show host, and that all changed when he felt the freedom to excel in real estate. I would describe our guest as a consumer advocate. His name is Brian Crabtree, and today he's going to explain exactly how to solve your funding problems as a real estate investor. Brian, thanks so much for taking the time to speak with me and all of our members.
Hey, thanks for having me. It's a privilege. I got to tell you, I came to know about you because I was watching YouTube one day and a commercial came on and it said something that if you put 3 words out there that describes me as a consumer advocate that sounds like me, it's the banks suck, right? I like this guy already, right?
Yeah.
This is great. So every time the commercial, it's a sickness. Every time I see that commercial, about 150 times now, I wait until you say the banks suck because it makes my day. So I just thought I'd share.
Oh yeah, I'm sure a lot of people on this call have seen my ad where I'm holding the $60,000 in my hand, which is actually movie money. And my CFO would not let me just take $60,000 out of the bank. I didn't want to have to change.
That is a question. I've had that question. I'm glad you answered it. I forgot I had thought, did he really have that much cash with all those people walking by?
I run an internet company. I don't even see cash. Cash doesn't exist. It's all video game money that just shows up in the bank from closings in real estate and everything we do at Connected Investors. So yeah, no, that's fake. That's fake movie money. But yeah, okay. The banks do suck. And that actually could be the title of today's show, because we're going to go over all the ins and outs of how to solve your funding problem when you're trying to deal with the banks. So before we dive into that, Brian, you contribute a lot of your success to your critical thinking and your just overall judgment. Why do you think this has played such a big role in your success?
Well, I think it plays a big role in any real estate investor's success. You've got to take situations that there's a lot of people in the real estate business, a lot of real estate agents, banks, professionals, et cetera. They're very black and white, and it's either one way or the other. And what's in reality in real estate, which makes, I hate, not gray area in a bad way, but when you can operate in the gray area and understand the gray area, you can really be successful because that's where the money's made. Not in an unethical sense, but being able to look at a situation and psychologically evaluate it if psychology is involved, look at the numbers, look at the facts. Every real estate situation I've ever met, I've done 5,000 brokerage deals. I don't think I've ever had 2 just alike. And I think critical thinking allows you to say, this is what I'm dealing with. This is my experience. This is the best solution. Act. And then when you have decisiveness and judgment, you can succeed in anything. This business isn't hard at all. We make it hard.
Yeah, no, that makes a lot of sense. Decisiveness is really important because guess what? No decision is a decision. And that's something I tell myself all the time when I get stuck in one of those moments where I just can't quite decide what to do. So what makes the Exactly How Financial Freedom podcast and YouTube show unique is every show comes with a detailed action plan. So we're going to pull all the steps, all the tidbits of information out of Brian's head here, and we're going to create a blueprint for you to learn from and be able to implement exactly what we're covering. So to get the show notes, the key takeaways, and any resources that we mentioned on this call, plus some free gifts that we have, all you have to do is visit exactlyhow.com. In addition, you can throw your name into the hat to win access to our flagship software that shows you every single type of motivated seller lead, from vacants to pre-foreclosures to probates to shadow inventory to zombie properties to motivated for sale by owners to expired listings, whatever it is, all on one beautiful Airbnb looking map, so you can easily pinpoint the best deals for you. This is something we sell for $3,000, but today someone is gonna get it for free. So if you're watching this live or during our YouTube premiere, run over to exactlyhow.com because we're gonna pull the name out of the hat real shortly. So Brian, let's go ahead and jump right into it. Can you kind of define for us just the different types of lending that's available? We're going to be talking about banks and how to avoid that, but from your perspective as a real estate investor and as someone who's been in the game, can you just define the different types of lending we're going to be talking about? This way it doesn't go over anyone's head who's on the line here if they're brand new.
Yeah, I'll keep it simple. First of all, for investors, you got to get away from the banks. If you got to deal with a bank, every time you go to do an investment, you won't be doing many investments. It consumes, it just takes your time. So you really have, in investing, you have cash, you have other people's cash. A lot of people out there don't know what to do with their money. I have friends that have a lot of money, don't know what to do with it. So I borrow it at high interest rates at times, but I don't pay a bunch of fees. It's not hard to get. I make a phone call, I do a mortgage, I buy a property, and off I go. That's okay. You can deal with private money lenders. There's big institutions. There's groups like yours that connect people. Those are the ways to finance deals. So you either have cash, or you have friends with cash, or business associates with cash, or you have private money lending groups or organizations that are formal and informal. Those are the ways to buy and transact real estate, because when you have to stop on the details of a bank and underwriting, you will not do many deals.
Yeah, well said, well said. And let me just, we talked about borrowing other people's money. So let's just talk about these different types of lenders. You have banks. We're going to talk about them in a little bit and how to not have to necessarily deal with them or understand what you're getting into. We have private lenders. Mm-hmm. We have hard money lenders. And then we also have this kind of other people's money, which to me is a very, is when you create your own lender. They're not out there actively advertising as a lender, but you convince them to be your lender. So a big question, and we have a lot of debate around here about this. What's your opinion? What's the difference between a hard money lender and a private money lender?
Well, hard money lender, I think, is more formal, and this is just my opinion. I don't think there is a definite definition, but a hard money lender is more of a formal institution, perhaps an LLC or an incorporated business that has a group of people that crowdsources funds or has its own funds, or they have a line of credit or an investor behind them with a lot of cash, and they have a formal process that's easy. And those that are out there that I know about, there's quite a few of them. You can usually do a loan with underwriting specific to the property. So they don't underwrite the investor. Make sure you're not in foreclosure or bankruptcy. But by and large, they're underwriting the property and saying, is this a good investment based upon the terms and equity? And that's a formal, I think, hard money lender. And yeah, you're right. Very correctly stated. There are people that you can go out and find and create your own money and lending. And that's the private money individual side. And those folks can be really invaluable, because you could have somebody that invented something that had a windfall of cash, let's say $10 million, and they know how to invent a product or a widget, and they're an expert in technology, but they have no idea how to do anything in real estate, but they really want to. And you do, and you have the education, you bought the tools, you've got the training, you go over there and you find there and say, hey, let's partner together. You've got something I don't have, cash, and I've got something you don't have, access to deals. And that's been what I've done for the last few years, is say, I got the deals, I just need some more cash. And sometimes I have cash, sometimes I don't, but that's how, I think those are the differences between those in purest form of my estimation.
Yeah. Yeah. So to kind of sum up what he said there, these hard money lenders, they're pooling together a lot of money and lending someone else's money to real estate investors. It's asset-based, not necessarily credit-driven, right? But credit always plays a weird role in rates one way or another. Then you have the private lenders, which I mean, maybe the best definition is they're lending out of their own bank account.
Absolutely.
Right?
Or
they're just pulling money out of their bank account.
Even IRA now, it's sometimes you self-directed IRAs. People have a lot of money and they're making They're worried about the stock market. Now's a good time for that because I'm moving all of my IRA assets into self-directed so that I can do what I do best. Why? I made a decision a while ago, and I maybe get off track, but why put all this money in an IRA and buy stocks? I don't know stocks. I know real estate. I can buy real estate in my IRA, so I've got cash there I've never tapped into. Some people may have that as well, and you can use that because as long as it's arm's length, the law allows you to do it. So there's really good ways to find money.
Yeah, and let me just ask you a question. If you could buy pretty much almost any stock for the price it was in 2011 today, it would be a no-brainer.
Right.
You could buy, because stocks have just went straight up. Real estate has done the same thing. The difference is if you're a savvy real estate investor and you have tools like the one we're going to give away today, you can actually find property at the 2011 prices.
Correct.
Right, in today's market. So that's why if you, if you're willing to roll up your sleeves and apply yourself, it's why real estate is the millionaire maker, because it's it's not get rich quick, but it's definitely where most people get rich. So thanks for spending the time to kind of clarify that for some of our new members and to bring some light to the vocabulary we're going to be using here. Now let's go ahead and jump into kind of the three main, not necessarily steps in this episode, but traps that banks throw out to real estate investors. And we talked a little bit before we got started here. And number one was the time it takes to get the loan. Number two was the legal structures the banks make you have don't allow for creative asset protection. And then number three was how the bank's process takes all the power away from the real estate investor. So let's go ahead and start with number one, the amount of time it takes to get a loan from a bank. Can you just talk about the difference between going to a bank versus a hard or a private money lender?
Banks are nightmares. And I mean, there are some good banks, but most aren't. As you said in your commercial, I joked about banks suck. And I couldn't say it better. Banks suck. Because you have regulators and attorneys deciding how to make lending decisions, not lenders lending money. 15 years ago, I could call a bank that I used to work with and say, I need $150,000. I got a chance to buy a lot here. When do you want to come over and sign the papers? I'll approve the loan. I have lending authority. We're done, right? That was banking 15 years ago before the crash. And I treated that bank with the same deference I would have treated a friend of mine who lends me money because I felt an obligation morally. Banks changed to where we detach the relationship. So without the relationship, everybody's a number, and you have to go through a process of underwriting through what I would call in the back end of the bank, let's call them underwriters, but really they're American idiots. And they don't really understand what it's like to be you, the investor who's striving to become rich, or the investor, God forbid you are rich. I never have understood since the financial crash why, if I own a dozen properties or 100 properties with no mortgage, the bank needs to underwrite every darn one of them to determine that I don't have a loan that shows up on my credit report or my HOA. I own them free and clear. It's on my tax returns. My credit backs it up. They still underwrite it. I can't buy a foreclosure 3 days before the sale waiting on a bank to give me the money. I better have the money going in. So when you look at the banks, I go back, I reiterate what you said, banks suck. I can't do business with banks and do investments and run a business in investments. I don't even want to do a mortgage to buy. I'm not even moving. I don't want to move from where I live and do a mortgage on my house because it's a nightmare. So don't engage the negative, toxic world of banking circa 2019 into your business and investing. It'll destroy you. You've got to find individuals or firms that lend to people like you and lose sight for a little while what the interest rate is. Who cares? Get into the property, make sure there's substantial equity. The interest rate is negligible when it comes to making tens of thousands of dollars in instant equity. That's my philosophy. And it's amazing to me how many people don't buy that philosophy. They want to go to the bank at 4.5%. They're more worried about a 3% interest rate spread or even 5% spread than $50,000. It makes no sense.
Yeah. There's a lot of different strategies out there. I hear people always talking about the BRRRR method. What is that? The buy, rehab, rent, and refinance. If you're going through the bank, that model doesn't really work all that well. Maybe for a handful of properties, but once you start refinancing too many of them, it gets tough. You're moving into a whole different world.
Yeah, I mean, after you have 4 rentals financed, very, very nearly impossible unless you have a solid career with a lot of cash flow to begin with, which means you may not have as much time to invest. So there's always this tug of war. People want to be investors full time, but they got to go work and make money. And those two are mutually exclusive in some ways. It doesn't, we all overcome it. That are successful, but it's harder. So when you look at, to me, investing is two things. Either I am buying a property that I call investment grade real estate. What is that? This is a property that has a double-digit cash flow I can retain on my investment, not what its future worth. I can reevaluate later. But if I buy it for $100,000, it can make 12. I'd work on a 13% model. If I can make 13% net before taxes, I'm keeping it if I can. And I'm going to try to get cash into it. And so if I need to sell a couple, flip a couple to get the cash to buy one, I have to do that. If the property's not a great rental, let's say it's $300,000 in Metro Atlanta, for instance, and I can only rent it for $12,000 a year. Well, that's a terrible return. I can get better than that in the stock market. But let's say I can make a quick $55,000 flipping it. It's gone, right? Out the door. And I'd rather go do two of those and buy $100,000 rental where my cash flow is higher. So I think you can't speculate. The problem I run into in the real estate business is I get so many people at the end of a bad agent who put them in a bad deal and they made bad decisions who says, I thought I was going to flip it or I was going to rent it, and all the numbers are wrong. That's where, I mean, I'm sure your connected investor program that you're selling and giving away today is what it sounded like something I've created privately for some of my clients. And it's a great circumstance because it teaches people how to make that evaluation so that some sales guy, which I'm in the middle of a field of, don't sell you a bill of goods, and you can make a critical decision. Because a lot of people in my industry suck too. We're as bad as the banks. And you get stuck with something, and then it destroys both your optimism, and you can't make money on it. And it's not hard. This is not hard. It's about being really critical thinking as a first question.
Yeah, exactly.
Evaluation of the numbers.
And just a little nugget here for you guys to take away. Real estate agents are not your friend. They want you to buy that property. That's how they get their commission. I've seen a lot of real estate agents, a lot of real estate investors get tanked by their friend real estate agent who's very optimistic about everything. And then when the music stops, the real estate agent has the commission and the investor is stuck with the property. Now,
I don't want to hijack your show, but I get a lot of hate mail when I participate because I'm in the real estate business and I'm a broker and I'm on media. And so people attack me in the business because I'm attacking us, right? I detach myself from that. Let me say this. The worst person to buy an investment property to flip or to rent from is a real estate agent. I can't sell you a deal. Why would I sell you a deal and I can take it for myself, right? If you have private money and you got a network, I can go find the deal, snap, buy it, right? I have to show it to 3 people to get one to buy it. I lose it, they lose it. No real estate agent is going to help you find a good deal. A real estate agent's role, if you find a good one, and there's a few out there, is call the agent. I'm one of these in Atlanta. I'll help you evaluate it so that if you flip it or when you sell it, I can make money helping you out where you're receiving profit. But I can't help you buy one at the courthouse steps. I'm not a lawyer. I can't help you buy that one that's not listed. Anything that's in our MLS is not a deal. It's retail.
Yeah, exactly. So really good to hear it directly from, from your perspective, because you're on both sides of the equation there. And it's a dog-eat-dog world out there, and the good deals go fast. They don't make it to the MLS. The deals that make it to the MLS are ones that need a ridiculous amount of repair that someone who's new might overlook. Those are pretty much the one. And then there's all the pocket listings that get sold right before they go out to the MLS. So that's why you have to be able to find those off-market deals. So at some point here, I want to go ahead and Brian, and talk about how to get 100% funding for your deals through hard and private money lenders. A lot of people always want to know that. So that's coming up. But before we get there, I want to announce the winner of our Pre-MLS software. So this individual went to exactlyhow.com, threw their name into the hat, and now they're going to have access to essentially every off-market deal, which we just talked about how important it is. And they can see every single flip that happened in their area. So you can see who's flipping properties and the spread on all of the deals, which creates a phenomenal buyer's list for anyone who's out there actively wholesaling deals. And the winner of this week's Pre-MLS software is Blake Saunders. Blake, congratulations. Thank you for being a listener, participating, commenting on our videos, sharing our stuff. That's helps you win whenever you throw your name into the hat right there. So we see your name popping up a lot. It always your chances to win go up. So thank you so very much, Brian. Our team will be reaching out with you, getting you all set up. All right, Brian, back to the banks. Let's talk about why the banks really handicap real estate investors when it comes to setting up their corporate structure and legal entity when they're buying properties.
I'm going to give you a story that's not real estate, but it could easily be transplant yacht and make it a real estate. I bought a yacht in March or April. The bank that we were using to do a very small portion, it's like 30% loan to value, a difficult loan, and they wanted me to structure insurance and the whole deal in a way I was completely uncomfortable with. I didn't know why, it just didn't make sense. 7 days after we closed, 7 to 10 days after we closed, the yacht, it's a sailboat, large sailboat. It's sitting in a yard, and the boat next to mine is owned by, from what I hear, the lead singer of the band Nickelback. So it's a large yacht, bigger than mine, and it burns to the ground and destroys mine. Thank God I had decided to fire the bank and pay cash because I did it my way. I can't because I'm in litigation now. I'm the plaintiff, fortunately, but I've been one damaged. But there was a number of things in there that made it difficult for me to tolerate because it started changing the way my insurance was set up, the way my legal structure was set up. And it was a very good thing that I said, bye-bye bank. I'm dealing with another situation now where because of a loan on a construction project in housing, my wife was on the loan and I wasn't. And I wish I had been, and I can't get into the details of it, but it's a deposition coming up, and I am hindered by the fact I'm not on that loan because I'm the one that dealt with everything. And we can't think these things out. These are two isolated Brian examples, right? The next guy, Jeff or John or Mark, may have something completely unrelated that the bank has said, we need you to do this, and then something happens you can't anticipate or predict down the road, and they have absolutely harmed you. Right now I have some defenses and some potential lawsuits to file on that bank deal with the house because of it. Did they follow banking guidelines? But the fact there are these guidelines makes banks so unwilling to take risks on people like me because the regulations are stacked against them. So the government has basically said to banks, unless you're below a certain bar, which is small community banks, we are going to hold our thumb on you, and if you make one mistake in loaning on that file, which means anybody doesn't have an 800 credit score and $1 million in the bank, facetiously, but it's about that bad, we're not going to lend money to them. So if you've got a 800 credit score and $1 million in the bank, you probably don't need a loan to buy an investment property. It wouldn't make sense. So everybody else, which is all of your audience, can't use banks due to government regulations. It's very sad. I get it, but it's not tenable. It can't work.
So all I heard you say is that Nickelback burned down your boat.
That's usually where that story goes, right? And I just remember thinking, thank God I paid cash. I can't get into the details, but the bank made me so angry at the end, I said, see you later. Yeah, I mean, apparently Nickelback's one of the most hated bands in America.
This is probably one of the reasons they're so hated. They're burning down people's boats.
Well, you'd hate them even more if you knew about the insurance nightmare I'm now facing, but we'll win in the end. But but again, the story I think was about the bank creating something that would have made
as far as the legal structure, buying in an LLC, making sure you have your properties in a trust.
I would have owned the boat. I don't own the boat, so I'm insulated. I don't own the boat. My LLC owns the boat. That was it. I mean, that's no secret. They wouldn't do the deal with the LLC, which is stupid. It's stupid. It keeps you from doing what makes any lawyer in America will say, don't own property in your name for a number of reasons. Somebody slips and falls and you got all these assets. Well, you don't want to expose everything. You want to split it up. Well, banks don't like that. And the underwriters are too stupid to understand it. They can lend legally, but they're too stupid to understand it.
Yeah, it's and typically after when I've bought properties from banks in the beginning, when I made my first one or two investment property mistakes, I've had to deed them out of my name into my company name. The banks don't like that either.
No, they don't.
Because now it's to get the due on sale clause there, and it's just it's a whole ripple effect. So the banks, it takes too long. They don't care about your legal structure at all that you work so hard to put in place. And the last thing we're going to talk about here on this this process here, before we talk about 100% financing and some other really cool things, they take the power away, right? Can you explain when you say the banks take all the power away? What does that really mean to you?
This may not be relevant to investors, but it's anecdotally very relevant. I remember sitting in a closing where the bank had said this personal property that's involved in the transaction can't be in the contract. It's ridiculous. It's of no value. It's just a concession. And the seller and the buyer are sitting there at closing arguing because the seller said, well, we had to sign an addendum to remove it. Well, yeah, but you said you give it to me. Yeah, but your bank, your lender forced us to remove it. So banks constantly instruct you as a buyer to take things out of a contract that they don't like for whatever ridiculous reason that exposes you to loss. And I see it in every third deal. Do 3 deals. Every third deal has something the bank has required that has literally harmed the buyer. Whether it be a first-time buyer, an investor, or a $5 million house, it doesn't matter. It's insane. So that to me is atrocious, and I'm really, from a political standpoint, very bothered that our government has not eased this up, fixed it, identified it, done something about it, because it makes investing in real estate more difficult, and it clogs up the market in general, which clogs up value appreciation. And it's one of my theories as to why values aren't rising even more rapidly than they have been, because people are finding it difficult to transact real estate. But in the case of investors where there's chaos, back to the point of this show, where there's chaos, there's even more opportunity. So you can take advantage of the things I don't like because I'm a broker and an investor. I'm kind of out of both sides of my mouth on that.
Yeah, now there is tons, billions, many billions of dollars pouring into the private side of funding, which is why we launched privatelenders.com, to where you can have lenders, non-bank lenders, compete to be your funding partner. Mm-hmm. The regulations there are much different, right?
That's the understatement of the year, isn't it?
Yeah, it's all asset based. It's about the deal. It's not about you and the other properties you own. It's just, this industry is just growing so fast. They're almost creating their own banking industry with all of the money that's kind of coming in, because the banks are falling short all across the board, even in the subprime world.
We're seeing it here in Atlanta. Our biggest bank's home bank, SunTrust, is merging with BB&T and changing their name because they can't compete even at that medium. They're a large bank. They both are. They can't compete anymore because the regulations are atrocious. And so what you're saying, I've actually articulated to my wife. I've said, I see a new mortgage industry developing that is outside of the QRM Dodd-Frank crap, and it becomes what you've just described. And it becomes, as time goes on, cheaper and cheaper and cheaper money. It's not there yet, but before long, I could say in the next 5 to 10 years, if things keep continuing at their current trajectory and the difficulty we're seeing in banking, banks are exiting mortgage servicing rapidly, and they're beginning to exit origination because they can't survive anymore due to the bureaucracy. And if that keeps happening, we're going to see the private market create a wild west of cheap money by investors who don't trust the stock market, don't know how to invest in real estate, but have cash they need to do something with. And that may be a complete revamp of the entire industry that is sorely needed.
Yeah, think about it. You deposit your money into the bank. They use that money essentially to lend. Plus, they have other ways that they pull money together, but that is crowdfunding. They're just, when you put your money in the bank, they're not giving you any real interest. So they're all the money on your money. So it's, the infrastructure is already there. Just people aren't being treated fairly for what they're bringing to the table. When I have my bank account in your bank and you're, making money on that. So it's there's definitely something new coming in the future when it comes to lending. But for real estate investors right now, it's a really exciting time because of of all the money that's pouring in. Money has never been easier to get. Our company couldn't exist to where lenders compete for your business unless the market is in the cycle it's in right now, to where when there's more money than there are deals. Most people on the line here, they attend all of our deal finding, property locating style webinars because they can't find deals, right? But let me ask Let me ask you something. This is the chicken before the egg. What comes first? Do you line up the money first, or do you find the deal first and then look for the money?
If you're asking me, whatever comes first, right? I've always been a guy, and I had a colleague of mine used to say, Brian can blow 100 grand out of sand like that. Not because I'm some genius, just because when I have something that I know is a good deal, I'll go all in, set my mind to it, go find the money. There's plenty of people out there that have money that don't know what to do with it. So I guess to answer your question bluntly, what comes first? Line up the money. I could go buy millions of dollars of stuff right now if the deals just fell in my lap, or I had the additional time to go out and find more deals than what I'm working on. So I've got the money lined up from friends, from not banks, but from institutions that do private money stuff. The problem now is finding the deals. So anything you can find that helps you find deals is great, because the deals are harder to find. The good news about the deals being hard is it may get easier, because a lot of these institutions that have been buying blocks of real estate have kind of stopped, and they're beginning moderately to liquidate. Those aren't the deals to buy, but you're no longer competing with a company with $3 billion they got to put somewhere to buy up property. So we dealt with that in the recovery, and they're now kind of exiting slowly and quietly. So there's some positives going on right now, even though the market's more mature. But again, like you said, I always have said the high grass theory. I don't look for what the market's doing. If there's 6 foot tall grass in the front yard, chances are I can buy it cheap.
Yeah. Yeah, and what we found over here at Connected Investors is deals are harder to find than money. So
absolutely,
anyone who's ever been able to find a deal, if the deal's good, the money will be there. If your deal sucks, go to the bank.
Because that seller's going to wait on you, right?
Yeah, exactly.
We'll have time on that one.
Yeah, but I mean, if you find a good deal, buyers are easy to find right now. And private money is really easy to find right now with sites like privatelenders.com. So people get so caught up with having to have the money first, or whatever it is, and you're having all these hypothetical conversations with lenders. Well, I'm going to go find great deals. I said, well, when you do, let me know. So great, Brian. Let me ask you a question about how to get 100% funding through through private or hard money lenders. Do you know any techniques that you've seen people use to get hard money at 100%, or more institutional private money at 100%?
And again, my experience in the private money lenders, more of the institutional private money lenders, which crowdsource, is that it's hard to get fully 100%, but you can touch 90, 95 pretty easy. So sometimes that involves, if the seller has equity that they're receiving and you're doing a private deal, seeing if the seller will hold back a little bit of money. That's always easy. A second note. Seeing if, sometimes it's a matter of how you do your, ARV or your sales value, and how much work is needed and how they lend the money. So you have to bring some money in, but then you may get that back in the repair allowances as they do inspections. That's the hard money institutional lenders, which are still easy. They underwrite the deal. With the private people, it's about selling them the deal. It's their money. They can make a decision because they don't like you today, but they liked you yesterday. So if you come to them and say, I've got a house here for $120,000, I can fix it up for $20,000. Here's my sheet, and you've got it documented. It's black and white photos. You even look like you know what you're doing, and I'm going to sell it for $200. And here's the comparables. Why do they care? They're protected, and the best thing can happen to them is you don't pay, and they take the house and make all the money. So, right, the private investor, which usually, like, I have a friend that's been a friend of mine for nearly 2 decades, and his little brother, I never would have predicted, would be a guy I'd call up and go, hey, man, I need to do a deal. I need $130,000. Can I get that next week? Yeah, man, we just took some money back. We're ready to go. He doesn't know how to invest, but he's also in the contracting business. So he knows whether my spreadsheet's BS or not, and he's got the cash. And so that's a win-win for me. It's easy money. They make good money. They're happy with it. He doesn't really want me to pay it back quick. That's a 100% deal when he has the money to lend. So having a Rolodex, which is an old school way, or a Google.
What's a Rolodex?
I'm dating myself a little bit, but no, having a list of people that you can go to, which I think, a half a dozen, 10 at minimum, because sometimes their money's out and you want to catch the one where the money's back in, they're ready to make money again.
Yeah.
That's the way you do 100% deals, because you found the good deal. Most of the money I've made flipping has been because I have a really close friend. We trust each other. He's like my little brother. I call him up. I'm great at finding deals. He's not as great at finding deals. So he's got access to all this money. He's been in groups like yours more than I have. And he's done really well because he took the information you're selling and really committed it to memory, and it's valuable, and he's executed in his own way. I've been the guy that's always had access to sometimes the banks, oddly, given my demeanor on them, and some of the liquidation firms to find deals that people just have no access to. And so I'll call him up and say, I need 200 grand. You want to join me on the deal? Boom, boom, 100%, no money out of my pocket. He brings the money, however he gets it. We attach it to the LLC. I got the deal. It's okay to split it that way.
Yeah.
Because I'm doing one side, he's doing the other. And it's, if you trust
what type of splits do you give those lenders? Are you paying them a percentage? Or are you paying them a portion of the deal?
It depends. You know, in that situation, he and I are like brothers. So if we're doing a deal with partners, he's going to do a lot of work after we own the deal. I'm going to do all the work to get the deal. I'm the legal guy. He's the execution guy. He's the guy that can get along with the contractors. I'm the guy slapping them, you know. So he's very diplomatic. He's a very good front person. He's going to carry his weight in gold. He's going to bring the money. He's going to execute the strategy. He's going to help get it sold. I'm going to do all the technical stuff, acquiring, finding, you know. Those kind of partnerships are nearly impossible to find. I'm blessed to have that one. If I'm just going to somebody and saying I need money, it's always a percentage. And, you know, that range can be 6 to 15%, you know, 0 to 5% origination, depending on urgency.
Yeah, everything.
Gotcha. Whatever, you know, it's a business decision. If it makes sense, I'm going to do it. If it doesn't, see you later, you know.
So are you paying them a percentage on their money as well?
I usually, you know, I've got one right now that's at 12%. I'll say that, you know, 0 in, I paid no money down. I paid an attorney $250 to file the docs. I'm paying 12%. I can pay it off at any time.
Gotcha.
That's pretty good. I mean,
when I was raising money in that capacity, I had what I called the 10-10-10 program. It was 10% on your money, 10% of the profits, and I'll get your money back in 10 months. And that was just really easy to understand and communicate to people, and people lined up to have that opportunity. Other ways to get 100% financing that I personally really like is to go to your buddy, to have some of these personal people that have some money. Not everyone has $100,000, $200,000. We might have 20 or 30,000. And you go to some of the harder private money lenders that require 10, 20, maybe even 30% down, and they bring the 30%. Because you're like, listen, I'm going to go ahead and we need $200,000. I'm going to go ahead and get 160,000 of it. I just need you to bring 40,000 to the table. And then those people just kind of like line up. So for people that don't have individuals, people that don't know Nickelback personally, like
I don't either.
Like our guest here, who that's his real private money lender.
I wish I knew them personally.
Yeah,
he's worth $100 million. I'm not. Yeah. So
it's good to be able to find people that might just have $20 or $30 or $40,000, and you can kind of put those two pieces together and grow together. And then because you're the one who's getting the other part of you're bringing all the money together, it makes the deal feel better for them and for you and for the lender as well. So that's a good way. I've seen people also just use credit cards. They've applied for personal loans to get the deal done. I mean, when you have a good deal that could change your life, that can make you $50,000, $60,000, if the deal is there, the money definitely shouldn't be an issue.
Well, what you're talking about here is the difference between starting out and being more mature. And there's two different types of ways to approach that. If you're starting out, you have to maybe bring people into deals. And one of the things that I've always wanted to do and never gotten off the ground, and have talked about it a lot, is creating a business that maybe has 10 or 20 partners where they're putting money in, because I can present to them, the partner I would do it was the guy I was just talking about. He and I have an extensive resume of successful deals. So keep an extensive resume of every deal you do. Here's what we bought it for. Here's what we spent. Here's how long we owned it. Here's what we sold it for. And when that's 200 long, like mine is, then you go to anybody, you can say, listen, I haven't lost money on any of these. Every one I've bought to flip, I flipped, right? And here's the kind of money I can generally predict you'll make on this, because here's the numbers on the deal. Boy, that gets easy. And it gets a lot cheaper if you're using a hard money lender, because they go, okay, instead of 14% or 25% for a first-time investor, we're going to give you the money at 7.5%. Yeah. And that's just as easy at 7.5% as it is at 24%. And the crowdsourcing that funds that deal will come in just as fast. So exactly. The other thing I'd add to what you've said and what I've said is that if you have the fortunate circumstances to have equity in your primary residence, Now, I would go to a bank for a home equity line of credit because I know people have no mortgage, but they have a $300,000 home equity line of credit, and they move in and out of that money all the time. That is a dream because it's at 5-6%. There's no origination fee. It's just like cash. And as soon as you sell a house, you pay the whole thing off again. That's the best case scenario, but not a lot of people have the ability to just go take out a $300,000 home equity line of credit either.
Yeah, no, but thanks for adding that, because that was a really important part of my initial growth strategy was an $150,000 equity line. Back in the day, you'll probably find this funny, Brian. I was picking up property subject to. This is how loose banks used to be. So there's a whole podcast on what a subject to is and exactly how to do it. I picked a property up subject to for $70,000. It was worth $300,000, and I got an equity line on the property for well over 6 figures. They gave the money to me, even though my name wasn't on the first mortgage.
Wow.
That's how loose banking used to be.
You've been doing this at least a decade then.
Yes, exactly. So all sorts of creative finance options, and people that are in the real estate game, if you have a good network of real estate investors, if you're part of the Connected Investors community, people that are in this game love, figuring out these puzzles. So when you have a deal and you're trying to figure out how to get funding, talking to some people, hey, how would you do this? You can really get some great conversations going, and it's fun to figure out how to figure things out in this space, because if the deal is good, the money's there, and there's a lot of people like us that just love talking about it all the time. So good stuff. Anything else you want to add before we get into the rapid fire section of this?
No, I would piggyback onto that. And I haven't seen your program. I just know when I saw you on YouTube and commercials a lot, I researched. You said, this guy looks legit. It looks like he's got a good thing going. And what you just said is really important. As a broker, I wouldn't be here if I hadn't had that experience before your team reached out to me. But as a broker in real estate, what I see a lot of times is people turning to Google to figure out how to be an expert. And then I'm in dealing with deals as a broker, my famous phrase is I'm always getting my own clients out of their own way because I'm arguing against Google and their perception of it. So being in a group of people like yours or others that are committed to the education of real estate, it's not the material you're selling that's necessarily going to make someone experience. And I did all of this when I got started. Conventions after conventions, training after training, programs after programs, probably things like yours. It was the people I could connect to that were doing at a successful level far beyond mine what I wanted to do and what I was doing that really got me to shoot up. Because that is how, as a broker, and it's the same as investing, I went from selling 5 houses my first year to 82 my second year because I connected with people who knew what the heck they were doing. And I think I hear that's what you're selling and telling people to do.
Yeah, I mean, it's starting off as a 19-year-old real estate investor knowing nothing. My network is what gave me the experience and the insight. I was able to leverage other people's decade plus of experience just by kind of getting out there. And actually, we did a great podcast on how to get a real estate investing mentor for free. It breaks down all the different types of mentors, how to find the people, how to talk to them, how to provide value in their life. So if this is clicking with you, definitely look up on exactly how to get a real estate investing mentor for free. It's only like 8 or 9 minutes, but it just gives you all the highlights of everything that I did to secure my first handful of mentors, which have been monumentally important to my, to the trajectory of my life. So before we get into the rapid fire section here, Brian, what would your life be like if you never got into real estate?
Peaceful. I feel like every day is one big argument after the other. No, I got to be honest with you. I say that as a context of the broker business, and I have sold 5,000 houses. So, I mean, God knows I've made a ton of money doing it, and I can't begrudge that. My life would be, I'd be another person driving in the little car for 46 minutes from Alpharetta, Georgia to Midtown and back to, 46 minutes each way every day in traffic, complaining the whole way that I had to go to work, complaining about what an awful day I had and wishing I could do something better and never actually doing anything about it because I was well on my way in the media business. And I got so disgusted by being told you can't get the promotion, you're too young, you're not ready, that I said, screw it, I'm going to prove to myself what nobody else believes in me. So real estate for me was the process of finally proving to myself that I in fact could be successful and no one could stand in my way. And for that reason, I say that anybody has the fire. You got to have fire. You got to have the passion. You got to be open-minded. You got to know what you don't know. You got to be humble, and you got to be willing to admit it. I still say to people, I've sold 5,000 houses. They get stuck on that as an arrogant statement. But I still don't know a lot. And so as long as you keep that, what do I not know today that may make me make a bad decision? As long as you keep that in your head, you can't help but succeed. You just got to be humble about these things. And I think for an individual, for me, it was always saying, at one point I put a car on the wall. I want that car. I want an Audi R8 Spider or Porsche 911 Turbo. The amount of money I will make trying to get that because it's sitting on my wall is huge, because now I know as soon as I put it up and say I'm going to do it because I've done it over and over again, I will do it. That's what this business is about. When you work for some guy paying you 60 grand a year, who's telling you every day how deficient you are, you can never make it. You got to do something about that, because America 10 years from now doesn't involve people making successful, viable lives at 60,000 a year. You better be doing it on your own, because robots and automation and all of those things are going to steal opportunity. But when you have assets that you're investing in, you're all the richest people in the world are rich for two reasons, one of two or both. They either built a company like Mark Zuckerberg called Facebook. You want to roll the dice for the lottery, because there's plenty of people that built a Facebook that's probably better than Facebook that didn't make it. Or they bought real estate. And there's far more millionaires and billionaires in real estate than there are who built Facebooks and Berkshire Hathaways and whatever else.
Well, that's where all the real wealth is.
Absolutely.
If you started, I started in real estate, then used my real estate profits to fund my tech company. Now all my tech company money goes right back into real estate. So it's just, that's where real wealth is held. So great, man. I appreciate that little, bringing it all into context for some of the new people here that are thinking about getting into real estate, and to re-energize those that are, letting small things get in the way of potential huge successes. So let's jump right into the rapid fire section here, and we're gonna have some fun. So the first thing that comes to your mind, on a scale of 1 to 10, how strict were your parents?
Oh God, 10 and a half.
Highest answer to date so far. Get up early or stay up late?
Get up early.
How many hours of sleep do you get?
7.
Favorite or most recent book that you read?
I can't remember the name of it. It's the book about the lady who died of cancer and came back, and Dr. Wayne Dyer had pitched it. I'm bad with names, so I can't. It's an incredible, life-changing book. But if you Google Dr. Wayne Dyer, lady died of cancer and came back, I can't remember the name of it. I'm sorry, I'm embarrassed.
We'll put it on. We'll put it on your page at exactly.
Life-changing book about just positive thinking and what negative thinking does to your health.
Awesome. If you could be any superhero, who would it be?
Superman.
All right. What is something everyone should do less of?
Complain.
Something everyone should do more of?
Cut loose, have fun. Do something that. Let me put it this way: if you knew you were gonna die in 3 days, what would you do first thing tomorrow morning? Do that more often.
Will people visit Mars in your lifetime?
Yes.
All right. Hey, thank you so very much for being on the show here today. And for everyone who is still listening, congratulations. You finished what you started. Only 30% of people ever finish any podcast, any YouTube. YouTube's probably even lower. So that means you found some value here. We got you, we provided some good information, kept you excited. So please just give us a thumbs up, a like, a share, tag someone who needs to listen to this. Take a look at our extensive library of Exactly How shows. And if you could, please comment. We spend a lot of time, energy, and effort doing these shows, and your comments, your feedback really fuel us. So thanks again. I look forward to speaking with you on the next Exactly How.
The Connected Investors app connects you with investors, notifies you of available properties, helps locate cash buyers and secure private funding to close deals. Set up in seconds to become a member of the Connected Investors social network. Now you can scroll through your main feed to find cash buyers, see investment properties not available to the general public, and network with investors by adding your own comments to a thread to keep the conversation going. The Control Center is your connection to add properties to sell, start new discussions, connect with local investors, and even find private funding. The Notifications tab will keep you alerted to new investment properties and offers. You'll also find new friend requests to connect directly with the community to build your network. From the property marketplace, you'll be able to find, favorite, and make offers on investment properties. Download Connected Investors today to find, figure, fund, and flip investment properties on the go.